Hi everyone, so just do another video here about cash ISAs, and just, if you're a bit skeptical about using, I suppose, potentially more unknown brands, the issue you have here, much like with if you buy unknown clothing brands, is the unknown brands tend to be better value for money. And if you're going through a main or maybe a more well-known established banks, they tend to be, then you may not necessarily get the same value for money. So at the moment, you've got a range of banks that are offering kind of 4 to 4.3%, like Nationwide, 4%, I believe. Leeds Building Society more at 4.3%. You've got various other ones in between. They're fixed. Fixed. Some of them fixed rate, some of them variable rate, but they're you're not getting the same value for money that you'd get if you were with the potentially less unknown banks like Chip and ones like that. Moneybox. Those are maybe less well known because I suppose you don't see them on the high street. Whereas the depending on which high street, I suppose, you might see Nationwide and Lloyd's tend to do cash ISA that's a fixed rate. So I suppose you've got the advantage that it's a fixed rate, but with all of these rates, even with the new dropped base rate to 4.5%, a lot of these rates at 4 to 4.3%, they're below the base rate, so you're technically losing the value on the investment, even though for a lot of people, if you're going to be paying tax on any interest, this would still be potentially better than having them in a typical account with, say, near 5% interest. But if you can pay tax on that interest at either 20 or 40%, then that's not going to be worth doing. Whereas if you're going to save the tax element, then these would still be competitive there. But for most people, you got to have quite a lot of savings to be paying tax on savings. It's for, basic rate taxpayers, it's £1,000 free. And if you go back above that, you pay tax, and higher rate, it's £500, and above that, you pay tax. So you might as well have it in an ISA if you're trying to avoid the tax side, but just make sure if you're going to look at a product, FSC is the protection, and then obviously that's got limits on it, 85,000 per person per bank. As some banks do share allowances, you could be very careful with that. So it's not financial advice, but it's just if you're looking for, I suppose, more established brands, they may still work for you, but you just have to kind of take into account your situation with tax and things like that. Let me know if you'd like anything else, like and subscribe.